So this is going to be a trade breakdown video for the one that was posted on Post NFT, right? So we're going to break this down on the reasons for it, right? So the next candle opens in 3 minutes and I favor lower, right? So in 3 minutes 55 seconds, an hourly candle is going to open, right? Let's touch on that for a second. This right here is the key to everything. It's not on the chart here, but this move here was a turtle soup into a daily fair value gap, right? NFP delivered into a daily fair value gap. You see that rejection we got and we're moving down lower. The next candle opens in 3 minutes. I'd favor that candle, right, to have a small Judas higher and then expand lower. Essentially, I'm working in an hourly direction, open, high, low, close, and you see how it's until you favor and commit to one way, can you then go on a lower time frame to, start to engage in line with your direction. Now, I like to always wait for a candle's open, right? When I get to kind of, read a candle's direction, I usually wait for the opening of a specific hourly candle, right? This is why I've kind of removed trading early, New York open kill zone, that 7 a.m. candle New York time. I usually let that go and I usually try to get the read on 8 a.m. or 9 a.m. I've essentially got a few shots of the day within, if I'm working in an hourly open high low close candle or open low high close, you just need the read on, you know, the next candle or two to find a scalp in the day. So for the scalpers in the mentorship at this point that are, you're nearly there, how many shots do you get in a day? If you just pick your one session, I'm not saying to turn up to London and New York. In your one session, either you're a London session trader or you're a New York trader. How many shots do you get if you're working in the hourly open high low close with a 5 minute time frame? Of course, you're considering the daily expansion. You want the hourly candles to print in line to where you're favoring the daily expansion to be towards, right? But we have been short on the DXY, only looking for bearish signatures on the DXY, right? Now price traded up into a daily fair value gap, and I'm seeing the hourly candles when I can get a good gauge on saying, is the next candle going to trade higher or lower? Because at this point, this high, I don't think we're going to tag that high out, right? We're probably going to go and trade down lower back to the discount of the range. Maximize the screen. So the target is working back into, this area of, mitigation block, right? Uh, you know, I had my eyes on this initial consolidation on the DXY. There was also a initial consolidation as well, but this is 2R. This is all you need, right? And it's pretty late in the trading day. Now, this was the 1 hour candles, the previous candles open, and this is the candles low, right? This is the previous candles open, and this is the previous candles low. I'm expecting an open low high close delivery for Euro USD. I don't want to see this low get taken out. I'm going to try to get close to this opening price. See how everything has been done on the daily and the 1 hour. I'm literally just now using the 5 minute for a price action model that is gonna deliver me higher. That's it. Now, if I just go back a second, right? You see this fair value gap here, how we're trading down lower into it, right? And we still got a bit more space for the DXY, so it shows that we're probably going to get to the 50% of that other fair value gap on Euro USD. I'm watching this fair value gap, the institutional order flow entry into this fair value gap for the DXY. All of this is inside a daily fair value gap. You see how I was looking at it because the DXY didn't actually reach its fair value gap yet, but this is, so I know that this is going to overshoot, probably closer to a full close or, 50% between the fair value gap, right? Now, if my stop loss gets hit out, let me go back to, if my stop loss gets hit out here, the chances of it running to this low is very, very high, right? There's a few pips difference between here. It's like a 5 pip difference. It will probably go and run there. So me having my stop loss here is still, safer. It's the 1 hour rejection block in here as well. If it's going to run to this stop loss level here, it's probably going to go run here. So having it here just allows me to have a tighter stop loss with, pretty much the same invalidation of if this stop loss gets hit here, it's probably going to invalidate any long ideas and I'll, get stopped out and, be wrong of having a long idea where it's going to deliver sell side actually. So right there, you get tagged in. Now here, when I break this, when we get above, the market gets above this high, right, this level of buy side liquidity, there is no reason why you need to have the same risk in the trade. If you're, right, every single time, right, and this is how I want you guys to trail your stops, and it's an ICT idea. Every single time, so I'm in this long idea, right? Every single time a new possible long idea forms within this, already long trade, shave your stop loss, right? I'll show you what I mean. It's just the candles printing now. There's nothing really to speak on here. So now over here, right, you see how we got that previous candles. Look at how long is left for the close of this candle, right? You see how it was open, low, high close, right? There's a minute left of this candle, right? Now, of course, the candle can still slam down. Previous candles low swept. The PCL means previous candles low. Now, from chapter 6, lesson 1, what type of delivery do we expect from here? We're inside of a fair value gap. Previous candles low got swept, and now we're trading higher. We're expecting buy side to get traded to, right? So now this is when I was feeling like very confident in this setup. When I see something like this, it increases my confidence a lot in the trade. It's just waiting, right? See how you see how GBP USD is trading a lot more stronger. Okay, so here, I just now we broke this buy side liquidity pool. We had this institutional order flow entry drill, which was essentially our entry, right? Now, if price comes back and trades lower than this institutional order flow entry drill, price is probably going to take out this sell side liquidity pool and work to this low. So let me change my invalidation level every single time. And this is where you guys need to listen to what I'm saying. As your trade develops, there will be new levels of invalidation that occur, right? So now what invalidates the trade ideal long here in this trade now? We had a bullish institutional order flow entry draw taking out buy side liquidity, right? If we take out this low now, it will invalidate any long ideas. So trail your stop loss from here to where the new invalidation level is for the trade. And you keep on doing that, right? Until your stop loss is at break even. see GBP USD how much is, you know, trading higher, and the reason is because Euro GBP was, trading down lower, holding down Euro USD, not letting it really, run quite strongly. A bit of expansion here. You see how Euro GBP is trading down lower, right? This means that GBP USD is, look at the difference on the percentages, 0.32% and minus 0.9%. This is trading a lot stronger. The currency selection on this trade was actually, we actually ended up trading the weaker one, right? Although it was, a winning trade, GBP USD would have offered a lot more, a much easier trade, a less stressful trade. Here, right here, I realized, the TP was, it should have been at this, candle's wick at least, right? You know, we were inside, consolidated terms, right? I didn't expect, a large move. We ended up actually trading way above this consolidation, inside of the, a weekly consolidation, daily consolidation. You have to absolutely lower your targets, right? And lower your expectations. This is enough in this type of condition. A 2R trade is great. You don't need to hold for defense and wish for something. Price can easily, turn on you. Understand that you're inside of a consolidation. We actually end up just taking the take profit down just a little bit. I think to the previous candle's high, we just remove it and put it down a little bit. Yeah, right there, put it to the previous candle's high. See how we have that initial consolidation marked out as well. And that's the end of the trade. Remember, the key takeaway is the management of the trade, right? The direction, stage, and entry we're going to work on. I'm going to try and make some, resources for those type of things. The management of the trade is very, very key, right? When your trade is moving in your direction, look if more bullish setups, if your long is going in your direction. Every single time you see another reasonable entry, right? When you've already entered, if you see another trade setup form, trail the stop loss, right? So for example, if you see an institutional order for entry drill and then it moves back into your direction, shave the stop loss. Don't shave it so close. Let like never be so quick to rush a break even for no reason. Systematically do it. Shave half. Get to, shave a lot of it. If you got the chance to go straight to break even, like it's expanded your way a lot, by all means get to break even. As the trade is developing towards your take profit, there is absolutely no reason for you to have a full risk 1% or the initial risk on that trade. Remove it, right? In the long run, if you can do this, minimizing your losses, all those 2R, 3R trades, even those 1.5R trades, it's going to hold a lot more. If you can get your trade, your average loss down to, I take a 1% trade, but I manage to trade well when it goes my way and I get it down to a 0.2% loss if it comes back and stops me out. And how much weight is that 1.5 or 2R trade going to have if your losses are on average 0.4R, right? That's how you have to think of it over many, many, many trades, right? So that's going to be it for this video. Of course, I'll try to do more of these whenever I can. And yeah, until the next time, I'll see you guys in probably the next lesson, hopefully.